Hey, how you going? This is my first video on YouTube, so bear with. But if you like this content, I will create more. Just leave a like, share, and subscribe, all that crap. But anyway, so what the go is with Bitcoin is I've marked up firstly on the monthly, the demand zone here, and as what you can see here, if I add in a high curve from the trend line, you can see a rough estimation where the market has topped out. Let's just make that blue to keep it consistent with the monthly. So we can see is as the market has created an exponential bullish movement with barely any pullbacks on a weekly and daily, this will obviously have pivot points to retrace to. But in the grand scheme of things, it's monthly just black candles showing bullish momentum. We have created an all-time high, corrected back, and then created a final top, which most likely in sync with a Fibonacci sequence. And then from there, as a supply and demand trader, I can't guarantee a top until I have my confirmation bias. But now, if I do stick in a monthly, I would like to see this zone here as a monthly supply, and also sometimes down to here, capturing in this wick here. You do have to be patient for supply and demand and finding imbalances. So you can't always find a precise measured move. You have to be patient, as I said. So what happened? The bear market has begun. It created 3 white candles, a pivot pullback up to the imbalance zone, which looking down on the weekly will find a reversion point. And if I keep this visibility on the weekly, which it is, we can then find that. Market then created a high curve to the downside in a bearish movement. And we are in a bear market. I don't care who you are. There's red eyes, crypto bros. Just it's not going up for a little while. You know, the market has to capitulate at some point. But yeah, in the meantime, I have a basis line of which I think the market should hit 20k roughly, and in between 15.7k. Although being a high curve from a departure point here, this is your departure. This is the arrival zone, and this is also the original level. So keep it simple, but price, as much as I don't want it to, having DCA positions, this will at some point probably hit with a high probability, and that's due to the regression curves which follow that pattern. Let's take it down to the weekly, take a look. So what you can see is from the markings, there are at present, I have got regression bands predicted, put in. The white relates to the fair value, and the green bands relate to where the lower and upper boundaries are of the lower formation of the regression, and purple relates to the opposite in the bullish market. So I can see at the present we have created multiple weekly timeframes of high curves here. Again, a pullback and correction, a further drop in the market, a nice consolidative area, which is good for range trading. However, I don't trade those, but if that's up to your trading strategy, go for it. Price has then created another yet high curve, of which it was doing a break and retest, and being here as a breakout trader would have been an optimal point to add a short position in, and taken a lot of profit along the way, closing your position out and adding up on pullbacks, probably here. Of course, now at the moment we are on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of 11 weekly bearish candles. So in my mind, a relief rally could be probable, pulling back towards the high curve trend line. What I mean by high curve is where the market is so steep, like this in the bullish, and so bearish, where it's just consecutive black bullish candles or white consecutive bearish candles. And essentially what it means is looking for a buying position upon this demand zone, for example, where price can take us back like so. So it could do this in the formation, take us back towards 40k, break out, and then retest. However, the highly likelihood at present, it looks to be more of a consolidative term, whereby price will look to the previous reversion point here, which relates to previous support, so support and resistance traders. However, it is a weekly imbalance, but it was weak due to multiple testings here, with high liquidity reactive points, and also failed to sustain, being multiple touches across here. So I can probably look towards the 33k 0.5 before a final push back down into the regression bands where the market will capitulate. However, nothing is permanent in life, as we all know, so trade with probabilities in your favor and have an overall sentiment which is unbiased in bullish or bearish perspective. Again, my targets are down here and down here, where I'll be adding my long positions in the next bull run before the next halving 2024. So let's take it down a step further to the daily. I don't really use a daily, if I'm honest, unless I'm just looking for a quick confirmation where daily ranges have broke out on a bullish engulfing or a bearish engulfing, and then my confirm will display where I can add my position in. So again, it ties along with the weekly. This can be used as a daily again, whereby we have a strong curve. And to those who trade flags, that is what I'm looking for here. To those who look for ranges, here's your wick and range. And you can see that it's created a downward pattern, high retest, consolidation zone, great for trading, a lot of price action going on here. I tend to stay clear of this and just let the liquidity do its thing. For a good retest, didn't break the high of the wick in the reactive wick here. However, it has closed bearish. And then one final go, and then your break and retest has begun, and a solid bearish move is imminent. So where are we going from here? So as I said, this is my structure in place on my fresh levels and my original levels. But let's now take a look at the Bitcoin dominance to see where all the coins, all the coins which will bleed against Bitcoin, are now going further into the bearish market. Bitcoin being like the gold standard, if you will, although a lot of people will leave their comments to this and it's totally fair, but it's becoming a hedge against inflation. However, obviously inflation is high at present, so don't be construed to the fact that nothing is inflation proof at present. Even gold is taking a few hits, and precious metals. So, but think of this as an overall digital gold, although you have PAX-G, but think of this as the gold standard, okay? So on the monthly, strong, fresh level, obviously an original level, the first touch, now it's on a second touch, and here is the low back in 2018, and here is a strong consolidated pattern forming on the monthly. Has now multiple tested on this fresh level and now created, original level and now created fresh levels of here. So this is the latest fresh level on the weekly. And now price should, from this high curve here, break out, and in the long term, over the coming months, while this bear market continues, Bitcoin always proceeds to become the high percentage. So as all the other coins bleed, Bitcoin remains dominant, even though outflows from the market are rapidly taking shape. But as this occurs, Bitcoin dominance will prevail, whereby the majority of investors and traders like to keep their liquidity placed. So I can see price heading towards this value here, roughly around 60%, although up to the 70% would be strong. And looking back at this, for that to occur, $7,000 to $10,000 for a Bitcoin. So 9,000, what am I saying? 9,500 to about 12,000 here on a weekly. That will get the curve up towards the 60 plus percentage, towards 70 percentile. The probability of this occurring does allow further sell-offs and outflows of the market to continue. So bear those in mind. And it's not a causative correlation. However, it is notable that as outflows occur in a macro market and macro events taking place, it just seems to be the flow. So if you chuck this on top by adding BTC, you can see it follows an inverse correlation, albeit not 100%, but it still follows an inverse correlation. And then overall, I'd like to take a quick look at my regression, logarithmic regression. So in the past, you can clearly see throughout all the data picked up, the low regression curve has picked up all the consolidated zones in also zonal markings whereby you can purchase in the bull run using DCA or adding upon imbalances and new fresh demand areas and selling at subsequent supplies if you feel necessary. That's your trading style. If you're long only, which I assume most of you are in your investment approach, you can clearly see that all the market data in consolidated zones, in bullish, not strong momentums, however, back in the time of Bitcoin being new, these were strong. But these are the real exponential growth points. And don't forget that diminishing returns do occur. So as the price now hits the very top of the market structure with a new all-time high, that, albeit 20x, is obviously nothing in comparison to the 100x you got back here. So it can happen again, but obviously the price will be way up here in the hundreds of thousands of dollars per Bitcoin. But back to it, looking at an unbiased opinion view, you can clearly see that we're now at a fair value line, smoothing logarithmic curve, and this has now shown that price is now within the fair value. So around under 30k, around 27 to 28k, to lows of about 23, 22, albeit this is 1 day delayed. So the true reflection of the data is down to about here today with a wick. This will print the next daily candle formation, and you can go back to the live data to check. But in terms of working on a logarithmic scale, price will now take us to the upper bands, and as price moves out over time, it clearly forms the good levels of where strong imbalances occur upon the curve. Again, there are consolidated pullback zones here, which I'll highlight quickly. And you can see that this also can form a shape across the regression lower band. And that then forms back to the monthly as well. So my monthly band demand zone is waiting around $9,000 and highs of 12. So this is where I predict that the market will capitulate. It's in line with the overall smoothing of the regression bands since the inception of Bitcoin. So if we just scroll out and look at everything, the curve starts there, and we will continue along this path, and this will eventually smooth out. So yeah, there we have it. If you'd like to follow me on any of the socials, I'll chuck my LinkedIn at the bottom where you can see an article I wrote about this bear market taking place previously, and the links below of where I actually started the article from posting back in March. So I don't post things just willy-nilly, like, from here, it's going to go bearish. That's not what I'm about at all. I give all the technical aspects and try and give an unbiased opinion in the macro environment from a technical analysis perspective. So yeah, thanks for joining me, and I'll see you in the next one. Take it easy.